We're joined by Nick Piquard, VP and Portfolio Manager at Horizons ETFs. Nick, it's great to talk to you. We'll have a look at one or two of the Horizons oil-related ETFs in a moment. But I wanted to ask you, you say you're watching supplies of oil, inventories of oil, and you say it's easy to make a bullish case for crude prices?
Well, yeah. Thanks, Andrew. Nice to be on the show. Yeah, if you look at inventory levels in the U.S., they've really come down significantly. And when you add to that, the shortage in, downstream of, diesel and gasoline and whatnot, in my view, that really paints a bullish picture for prices going forward, especially when you think of the fact that most of the inventory that is existing has come out of the SPR reserve, and the Biden administration probably doesn't have that much more room to move on that front, on the SPR front, especially after the election.
It's fascinating, isn't it, that the Americans have released so much oil into the market, draining their reserves, but it hasn't depressed the oil price that much.
Yes, I agree. And I think that's what really paints a bullish picture. Mm-hmm. You would have thought that, given the amount of release of oil from the SPR, and the fact that China has been kind of under some kind of a lockdown for a few months now and reduced oil consumption over there, you would have thought that would have been a very bearish picture for oil. But despite that, prices have actually hung in there. So I think when those trends reverse, you could see significant upside.
You have a bunch of oil products out there at Horizons. One that was interesting us was the covered call equity fund. We know about covered call ETFs. Of course, they reduce volatility, increase income by selling call options on the portfolio. Just update us on that. How are you managing that one these days?
Well, ENCC, which is our oil and gas covered call ETF, we're very happy. We're getting a lot of demand for that ETF, and the way the portfolio is constructed is basically through large cap oil and gas companies as well as pipeline companies. So we have an equal weighted portfolio: 60% oil and gas producers, 40% pipelines, and a nice dividend yield underlying the portfolio, but also we get additional yield from the covered calls.
Right. So let's have a look at the scorecard. I think we can do a scorecard here for 1 year. And certainly the covered call ETF has been beating the TSX Energy Index. However, over 5 years, it looks like it has lagged, Nick.
Yeah. So one thing I should note is that we recently made a big change to that ETF. It used to be mostly an equal weighted oil and gas producers of only producers and no pipelines. And so it was significantly more volatile previous to the change that we instituted at the end of June. Mm-hmm. But the bonus is that from now on, we should see less volatility. But the advantage is over the past year, with oil and gas prices going up, we've really outperformed. But, on the way down, it's a two-edged sword.
You also have those others, the double bull ones. Of course, we know about the volatility. Over time, just remind us what happens with those ones, though. You don't have them as buy and hold portfolios. They're meant for short-term bets, short-term investments in oil and gas prices or oil prices.
Yeah, I mean, these leverage ETFs are tactical in nature. Because they have leverage embedded, they can be significant. There's going to be significantly more volatile than the underlying. But they, HEU, which is the bull double 2 times bull ETF for the energy sector, it's up 100% over a 1 year period, or close to 100% over a 1 year period. So you're gonna do well, in the short term if prices go up.
Right. So HEU is the bullish one, and so that has thrived over the past year.
That's correct.
Okay. Yeah, and what about AGD? So I'm just looking at AGD over the past year, which is the way of betting against oil. I have that one down, something as of yesterday, and it was down more than 70% in the past year.
Yeah, so HED is going to be the opposite performance in terms of compared to HEU, where when prices go up, HED is gonna go down, and because you have a double leverage there, it's going to go down even more. That's for people who that is for people who are bearish in energy, and that hasn't worked out well over the past year.
Right. Just very, very quickly, stocks that people equities that people want to buy if they are bullish oil. What are some names people might consider here?
Well, I do really like the Canadian names. We've seen Canadian oil differentials, spread out, move out a little bit. The spread has increased in the last few months because the SPR reserve is the same kind of crude that gets produced out of Canada. And so that has increased differentials. But I think that's kind of suppressed some of the stock prices as well. And so I think as SPR releases come to an end, that differential could come in and really help Canadian producers. I'm thinking companies like even just Suncor and CNQ.